Hello, Contrarian Capitalists. I hope you're doing well. Welcome to the midweek macro for Wednesday, the 4th of March, 2026. Just as an FYI, this is the first time I'm doing a midweek live from my desktop using the live feature on Substack. So I'm hoping that all of you can hear me okay. I'm also going to attempt this week to share a screen. And again, I'm hoping that this is the first time I've done it this way. I normally use my mobile phone. So again, I'm hoping the audio is fine and the sound is fine. The week that we've just had, or it's only Wednesday, but the last 5 or 6 days have been absolute chaos, I think, to say the least. We will go through much more of the geopolitics a bit later on. And we will start with looking at potentially a market meltdown. And I will now bring up my screen. So hopefully you can see all of this. Let us start with South Korea. Now, the reason I start here is because this has had a massive sell-off, and there's an ongoing theme here, as we're going to see. So, of course, just to recap, just in case anyone isn't aware, of course, we've had the USA and Israel attack Iran. Iran has retaliated and has aimed a lot of missiles at energy infrastructure. We have seen missiles aimed at allies or friendly people over in the Middle East. And what I mean by that is, for example, the UAE. You don't normally consider the UAE getting involved in this, but again, there's been some issues there. I believe those attacks were aimed at the US embassy, if I'm not mistaken. And of course, that all started Friday night, Saturday morning. Of course, that has gone on and on and on, and is still going on at the time of doing this recording. Now, normally in these circumstances, and we'll get to commodities a bit later on, normally what will happen is that if energy is attacked, oil and gas and so forth normally go up, especially if energy infrastructure is attacked. And then gold as a safe haven play would normally go up. Silver's a bit of a different story at the moment, but we'll get to commodities. Normally in the same circumstances, equities have a bit of an issue. And this is why we start with South Korea. So we can see here, this is on a weekly chart. We can see here South Korea, the Kospi index as it is. It has so far this week gone down 18.43%, which is kind of remarkable considering it wasn't even open on Monday. Monday was a national holiday in South Korea. So open on Tuesday, went down, continued that into Wednesday. The two biggest companies in the Kospi index are Samsung and SK Hynix. Now, SK Hynix is a semiconductor firm. But with Kospi coming back and those two companies not doing well and combined with the rest of the index, war fears, etc., we can see this. My understanding is it's also broken the circuit breaker over in South Korea twice. So twice in 2 days, it's automatically stopped trading as well. And the reason I bring this up is that, again, because of how big SK Hynix is and what they do, semiconductors, obviously Samsung with a bunch of electrical products as well. This could start sending shockwaves through the equity markets. And we see that, and I'll bring up, I never looked at this one before, but this is Dubai. Of course, as I just mentioned there, the UAE has been in the firing line with Iran as well. That's got a lot of Dubai bros, upset, and quite rightly so. But that's a different story with Plan B, so I won't go into that right here. The thing is, again, if we just strictly look at indexes here, again, that index has gone down. Admittedly, it's only 4.71% thus far this week, but the thing is, it's gone down. We go over to Thailand. Similar thing here over in Thailand this week. The index over there, which is the SET, that is down nearly 10%. We are talking, Wednesday afternoon here, of course, over in Asia. It's, Wednesday night, but Thing is, it's been 3 days of trading, the exception being South Korea, and it's been 2 because of the holiday. Index is massively down. If I bring up the Nikkei as well, the Nikkei isn't heavily down, but 2,248 points off this week so far and down 3.84%. I believe they've called an emergency meeting this evening in Japan, or this evening Eastern time, of course, Thursday morning in Japan. So again, I have no idea what's going to happen between now and the end of the week. I'll quickly bring up the Hang Seng because we look at it as well. And again, with the Hang Seng, not a surprise. This is down. It's down 1,381 points. It's down 5.19%. So we've got a recurring theme here. Bear in mind, this is just Asia. If we go and bring up the FTSE 100, of course, over in the UK, that's been going extremely strong in the last couple of months here, as you can see from this weekly chart. But look what it's done so far this week. It's down 2.5%. If we go and look at the DAX over in Germany, again, GAP's down and is down 4.27% on the week thus far. That's over 1,000 points. So we have a recurring theme here. I'll bring that back to energy a bit later on when I get onto the energy and the geopolitics. But just from an equities point of view, it's not looking good. But let's go over to the USA and looking at the S&P 500. Now, the S&P 500 is relatively, muted. As you can see here, it's up 3 points this week, so 0.05%. Took a bit of a hit on Monday, as you can see from the candle there. But it's recovered that, and it's break even so far. And Nasdaq, again, similar thing, took a bit of a hit on Sunday into Monday, up 206 points on the week thus far. We go to the Dow Jones, and now the Dow Jones took a bit of a battering. I think it was down by over 1,000 points, 1,200 points maybe at some point. That's come back. It is showing a green candle, but as you can see here, it's down 170 points on the week, 0.35%. Really, what I would like to call relatively unchanged. And a quick look in the Russell. Again, Russell up on the week, up 50 points, up just under 2%. So this is telling us that, and this is in my opinion, I think I've just stopped sharing my screen so you should be able to see me again. What this is telling us is that this war premium, these energy prices, again, I'll get onto that when we look at commodities, that's taken its toll. The shock from the markets is people that are either trying to get their cash out if they've not been able to. Unlucky, the stock markets don't like that. The reason I think we could be seeing the US markets doing okay in comparison to others is that dollar strength as well. It wasn't a surprise to see the dollar go up. I'll go through that chart when I next get back onto screen share. It's not a surprise to see the dollar index up on the week. And this could be because people in these scenarios will rush to dollars. It's still, the global reserve currency. Whether we want to like that or not, that's as it is. People will rush into it. If people get spooked off by other markets, so the Nikkei and so forth, and if you're a hedge fund manager or all of these things, you might then decide, well, hang on a minute, I want to go back into the US because it's more of a safe haven. Then maybe that's why that is happening. But we have to also look at the US dollar as well. But it's not just that behind the scenes that's causing a lot of concern. If I just bring up a new tab, and I'll bring this back to screen share in a second. Now, for those of you that have just joined a bit late, this is the first time I'm doing a live from my desktop. So I'm hoping, again, that the audio and everything is okay. So just bear with me as I talk through, as well as going back and forth with screen sharing. Let me just bring that screen share back. Let us bring up this. So you should be able to see on the screen now the FLBL, which is a Franklin Senior Loan ETF. Now, this looked a lot worse this morning, and it looked a lot worse yesterday. It's actually bounced back a little bit, but it looks at senior debt in the US, and that's at a very low level. You can see that even from September, the end of September 2025, this has been tailing off. So this is a cause for concern. And if I zoom back out and you see this little line here. So this will tell you the last time it was at this level. The last time it was at this level was about April 2020. Now, I think we all know what was going on in April 2020. There was a lot of panic in the markets for various reasons. And that's the last time that the Franklin Senior Loan, the FLBL, as it is here on TradingView, that's the last time it was this low. It's even lower than it was in the Liberation Day tariffs of last year. It looks a bit better now, but trust me, this green bar on Monday, Tuesday was right down here in the 2250 range. This is telling us also that things underneath the surface are not healthy at all. And, can they improve? Yeah, maybe they could. But again, I think with everything that's gone on in the last 5 days, it's another, almost like a nail in the coffin, so to speak. And I mentioned this in the commodity wrap and the market wrap last week, that if you look at things like Blue Owl, you look at things like Blackstone, again, those charts from a share price point of view are not good. But then you read about small mortgage companies in the UK that went bust a week or so ago, and that's reverberated into the banking sector. That's why the banks were down in the USA last Friday, because that company in the UK, sorry, I forget the name, it's not in my head right now, but that company went bust, owed Barclays Bank a lot of cash apparently, and again, that had ramifications moving forward. So that is something to bear in mind on this. If we go over to commodities, and again, what I'll do, I'll look at commodities first, and then I'll take off the screen share, and then I'll go through the bigger picture, how I see it, the bigger picture at play. So, of course, oil, again, very interesting. This is going to chop and change every day. That is one big candle. This is WTI we're looking at here. You can see that it is up 11% on the week, up $7.40, trading at around $74.67. Not a surprise to see oil up at all. Gold, if we look at gold, gold might have caught a lot of people by surprise. It's caught me by surprise a little bit. It is down on the week, $150. It's currently trading at 5,128. Now, the reason why gold might be down, this is what Vince Lanci said on the show yesterday, is that gold might be sensing that this war is coming to an end. That's what gold might be sensing. It's not a guarantee, but we have gold, silver, and oil telling us completely different stories. Oil is telling us, yes, that premium's there. There's a lot of carnage out there. I know there's been a lot of things online with the Strait of Hormuz being effectively closed, and now it's not closed, and US shipping, or the US Navy's guiding shipping through. I'll get onto that in a bit, but that's what oil's telling us. Gold is telling us possibly that the end of the conflict is near. I don't know about that, but let's find out. And silver, now silver's telling us a different story for a different reason. Silver is down 11.2% this week thus far. It's down $10.50. It is sitting at 83.25. Now, the reason silver is telling us a different story is because I think it's that Jane Street is now involved. And we wrote about this in the commodity wrap last Friday. And now Jane Street, if you're not familiar of who they are being sued for playing around with Bitcoin, basically. At 10 o'clock every morning Eastern, they would come in, play around with the market, flush a lot of people out, buy lower, rinse and repeat the process. That's what the allegations are. And if you look at charts going back from Bitcoin, you'll be able to see it quite evidently at 10 o'clock Eastern. That's what was happening. Now, they've been sued over that. Funnily enough, they stopped doing it. So what have they done? They've gone over to silver, and they've gone over to the SLV ETF. So they're now the largest shareholder in that. So we can expect the same to happen in silver. I think this is why we're seeing this. Again, these are weekly charts we're looking at. But this is why I think we're seeing this. They're coming in. They are going to do the same to silver. Now, from a trading point of view, that's a pain in the ass, because that that might be difficult to trade. From a physical bullion point of view, actually that could be quite useful because if they are going to play shenanigans and call it manipulation, call it spoofing, call it whatever you want, this is what's going on. If they're going to do that, then I imagine this price could go down. It might not go down significantly. I think 80 is that key psychological barrier at the moment. Again, that I'm taking up from Vislanchi. It could go a little bit down from there, maybe 75. And if it does, that could be viewed as another good buying opportunity, especially for people looking to add to their physical positions. This is why I always maintain it's important, it's imperative that you will always have a different mentality from being a physical stacker than you would if you're trying to trade this. A lot of shenanigans at play. But ultimately, if you'd have said to many people, this time last year, March of 2025, silver at $32, if you'd have said in a year's time, silver's going to be north of 80, I think most silver bugs would have taken that. So let's try and put things into perspective. But I think this is why, with Jane Street now being involved on the paper silver side, I think this is why we're going to see shenanigans moving forward. That would not be surprising whatsoever. We'll have a quick look at platinum and palladium before going on to gas. So platinum here, again, down on the week, down 8.5%. It is at 2,156. Bring up palladium quickly. We see palladium, again, similar story, down on the week, 5.86%, down just over $100. It is trading at $1,679 at the time of doing this. I should bring up Bitcoin. Sorry. I've just mentioned Jane Street. Now, because they've been sued and they have taken, or they've got out of Bitcoin, I did ask this question on Friday: is Bitcoin back? This chart might suggest that it might be. It could be a bit of a bounce. I know that North Star bar charts will likely say that it is a bounce and it's going to continue its downward trajectory. But certainly for those that are interested in Bitcoin and crypto in general, you're probably looking at this chart, up 12%, over 12% on the week, up $8,000, currently at 73,793. Is Bitcoin back? Don't know. I'm just going to watch this space and find out. But again, funny that manipulation's gone out of the market and I don't want to say it's going back to normal, but yeah, funny that the manipulation's out and maybe actual price discovery is taking place. I think we're going to see the opposite in silver. I think it's going to be manipulated to the downside moving forwards. So just be careful if you're in silver. I should also bring in the miners and say that if you're concerned by what's going on or what's likely to happen in silver, then the miners are going to be a very good space to be because they would have taken a battering this week. I quickly looked at my portfolio this morning. I know that's down a little bit as a result of all of this, but that could mean that the miners actually present the best value moving forwards. Not all of them. That's not financial advice. Please always do your own homework. I'm just saying that, the mining space is possibly a very good place to be moving forwards. Just take this as an opportunity in a nutshell. Right, I'm going to bring up natural gas. So now we normally look at natural gas spots. So this is Henry Hub. This is over in the USA. Now, the reason I bring this up first is I want to show you the European one afterwards. Now, if we look at what we look at here, it's up 4 cents, 1.45% on the week, at $2.94. Not a lot going on here in nat gas spot over in the USA. I'm wondering though if this last week's candle here, I do wonder if that might represent the low for now and bounce back up to the upside. Watch this space. If I have a look at the European natural gas, which I believe it's Wisdom Tree off the top of my head. Let's go for here. Yeah, that looks about right. And now, again, you'll see that this candle was absolutely doolally on Monday and Tuesday as well. It's since dropped down considerably, but it is still, and this is for European natural gas, it is still up on the week 53%. That's quite a big jump. Now, what direction that's going to take moving forward, of course, I think that will definitely depend on how things play out. But we know that Qatar Energy have declared force majeure. They've closed down LNG production. Qatar Energy, I believe, accounts for about 20% of global production of LNG. So that's a massive shock to the system. That was true last time I checked this afternoon before doing this video. So if you're in Europe, this is going to likely get onto your bills at some point. I'm not saying your bills are going to go up by 53% straight away. I've had this debate on Substack already today, but trust me, the powers that be will use this as an excuse to, likely increase the cap, or however they can increase your bills, basically, if you're over in Europe. Well, that'll bring me on to the geopolitics. But before we do that, I am going to stop sharing that screen. So I'll get myself back on the camera. Before we get on to that, I'll give you a couple of things that have been going on in the Contrarian Capitalist this week. So I'm delighted. I just want to say thank you, of course, to everyone that attended the Asset Confidentiality webinar with Adam Fired and myself a couple of weeks ago. What Adam's done is he's gone out and he's got one of his senior advisors as well, because Adam does work with a team. So it's a gentleman called Mark Morris. He's consulted for the OECD and the EU. So we're going to be doing another webinar. That's going to be completely free. That's Friday the 13th of March. That's actually going to take place at 9 o'clock Eastern in the morning. That's 9 o'clock in the morning Eastern time, Friday the 13th of March. The webinar is completely free. Again, we're going to look at asset structure. We're going to look at asset confidentiality. If you're not able to attend, please register anyway, and you'll get sent a free recording once it has been done. I'll put a link to that in the post that comes with this video. So thank you for those that attended. If you missed your chance, you've got a second chance here to do on Friday the 13th of March, 9 o'clock in the morning Eastern time. Completely free. Please do register, and you'll get, even if you're not able to attend, you'll get a free recording once that's done. Geopolitics. Right. Now, I'm going to take the emotion out of this because I think that's important here when we're looking at everything that's going on. And I appreciate that those that are watching, some will agree, some will disagree. I just want to bring the bigger picture into play. And from a plan B point of view, I want to say that the last week or so to me, it's important why you need a plan B. I know that there's going to be people that might not want one, and there's people that will not want one at all and are quite happy to stay in whatever country you are in the world, and that's absolutely fine. What I've noticed this week is the fallout from what's been going on has impacted it's obviously impacted a lot of people around the world, of course. It impacted a lot of people in the Middle East. From a plan B community, it's been very interesting down here in Paraguay, which is where I am, to see the reaction of people over in Dubai. And I don't know why people think Dubai is a country, but that's a different story. It's the United Arab Emirates, because they keep boasting about, well, we've got tax-free and we've got this and we've got good weather, and that's fine. I've always made the distinction that Dubai is not for me because of war premium. Now, I'm not saying that war can't happen down here. Of course it can. It's unlikely, but nothing's impossible. War premium was always a thing when you just look at a map, and I actually might bring up a map in a minute, actually. If you look at it and you go, well, actually, hang on a minute. If, Iran and Israel start kicking off again, or someone else gets involved, the UAE is in the middle of that, along with, places like Bahrain and Qatar and Saudi Arabia. So that's always been the difference. So it's been interesting to see expats in Dubai and people that are, celebrating Plan B have been under the cosh this week. Just wanted to air that out there. But it does also mean that it is important to have Plan B, because if you are in a country where, a war breakout is going to impact you, and you want to move and you want to get your family out, whatever it might be, you want to have that in your back pocket. You want to have that ready to go. So it's not too late to get one. I'm not going to advocate for a particular country. For those contrarian capitalists, you know my background. I'm a British citizen, I've got Mexican residency, I've got Paraguayan residency as well. That's my trifecta in place. Might get another one at some point, but again, they're the three key bases that I've got, and that's me personally. So it's not too late to get a Plan B whatsoever. So just want to bear that in mind. From an energy point of view and from a geopolitical point of view, I'll try and choose my words carefully here. If the aim of all of this, from a United States point of view, if the aim of all of this is to disrupt China, and from an energy and commodities point of view, to secure as many of them as possible for the USA, and or to disrupt China from getting their hands on more energy, and also to screw over the EU and the UK financial system in Davos and so forth, you have to say the US are on track here. And I'll hold my hands up to that. Now, you might not necessarily agree with that, and I'm sure there are going to be loads of different tones and undertones involved. Take the emotion out of it, because I know that people will argue it's unconstitutional and the president shouldn't do that, and I get that. From an energy point of view, if your job was to disrupt China and to screw the UK and the EU financial system, the USA is on point here, and it's doing a very, very good job of that. Why is that? Well, go back to Venezuela. That, in effect, secured a lot of potential oil for the USA moving forwards. Now, it's not going to come online tomorrow. It's going to take years. It's going to take a lot of investment. But when you've got companies like, I think it's Chevron, Exxon as well, big players in the market, they can put a strategic plan in place. They've obviously had issues with China about the Panama Canal as well, big shipping route. Venezuela crops up. Okay, they got that dealt with behind the scenes. Israel and Iran pops up. Now, I don't know who to believe, because Mark Rubio sounds like he's talking a lot of sense. I can't say I agree with a lot of what President Trump has said, but Mark Rubio seems to be talking a lot of sense here. However, again, if all of this is because they knew that if they were to attack Iran, Iran would fire back, but possibly look at attacking shipping and the Strait of Hormuz and energy infrastructure in that area, well, what would happen? Well, China, I think, imports a hell of a lot of oil from Iran. I don't know the percentage. I saw 90% online, but I haven't verified that myself. That's a lot of barrels of oil. And China needs and wants low oil prices. So if the aim of doing this is to provide a shock to the system, then he's on track. That's a lot of oil that is being taken out of China and, of course, the whole Middle East. So we've got to look at it from that point of view. Also, interestingly, and I can say this being an English citizen, a UK citizen, he's managed to chuck the UK under the bus as well, which I find hilarious. So US and Israel attack Iran. Iran fires back. They effectively close the Strait of Hormuz. I mean, they've not, said it, but shipping's dried up, to say the least. That gives Lloyd's, so again, the company that does a lot of insurance, they banking as well, but a lot of insurance based over in London. They've got a lot of opportunity to either increase their premiums or underwrite everything. They step away from the underwriting for shipping in the Strait of Hormuz. So what does President Trump do? Goes in and says, yeah, no, the US military or the Navy will deal with this, and we'll go from there. So in effect, he's outplayed Sir Keir Starmer incredibly well, or not that I imagine that's difficult to do. I'm just saying, if you're sat here from the US point of view, it's an absolute genius. So he's thrown London under the bus. He's thrown the UK under the bus. Of course, what happens with all this disruption, as we've just seen for the charts, we've got oil that's gone through, it's gone up, over 10% this week. Of course, it was up higher, but it's kind of come back down a little bit. How much of that is war premium, we will find out moving forwards. I couldn't imagine this is going to go on for a very, very long time. But then again, we said that about Afghanistan and Iraq and so forth. So watch this space. He's disrupted. Well, the US has disrupted China and their oil via Venezuela and now in the Middle East. The increase so far in European natural gas prices means that if the EU wants to get more gas, and with Qatar doing what they're doing, they then are going to likely turn to the US. Well, that secures that for the US as well. I mean, the more I think about it, the more I think the more genius it is. And again, I'm not condoning it. I'm not saying it's the right thing to do. I'm taking that aspect out of it. If you look at it from a pure energy and geopolitical point of view, I think the US has played this so far pretty much perfectly from that point of view. I just want to make that clear. I am going to bring up a map. So I want to show the impact of shipping as well, just so I'm a visual learner as well. So this makes life a lot easier if I do this. So if I bring up here and I go to Google Maps here, of course you can see, yes, I'm in a sunshine at the moment. Let's zoom out from this. So let's have a good look. Let's have a good look at a map of the world. So obviously got a lot of stuff going on where my mouse is at the moment. I don't have a pen ready to draw, but this is what we've got. So we've got the USA here, you've got Canada here, and so forth. So we've got the Americas here, the old Monroe Doctrine, Donroe Doctrine, whatever you want to call it. We've got a key shipping channel up here. Oh, funny enough, there's Greenland. That what's been in the news in the last few months. Well, Greenland's been on it. We've also got the Panama Canal that goes through there roughly. So big shipping channel. Let's fire across to the Middle East. Again, so if you've got things coming from Russia and wherever, and they've got to go round here through the North Sea and through the Med, you're going to go through here, the Suez Canal, going to go down through the Red Sea here, and again, this tiny bit here, the Bab al-Mandab Strait, which sits between Djibouti over in Africa and Yemen. So yeah, think Houthis if you've never heard of Yemen before. Again, key shipping channel. That's under a lot of pressure at the moment. Let's zoom out a little bit. Let's head over again and zoom out a little bit more. So we have obviously Israel is here. We have Iran here. We have the Persian Gulf, Arabian Gulf, whatever you want to call it. That is around here where my mouse is. And of course, you got this thing here, the Strait of Hormuz. Gulf of Oman, Persian Gulf, Arabian Gulf, Strait of Hormuz, insert whatever you want to call it here. In effect, key shipping channel. So that's been disrupted as well. Of course, a lot of oil fields around here. So this is all, the proverbials hitting the fan. You've got key shipping route. Again, I'm going to zoom out here. You've got key shipping route here, not going too well at the moment. You've got a second key shipping route here, which again, you've got that little spit at the bottom, which is a pain in the backside. You've got another key shipping route down here. The other key shipping route is up, in and around Greenland in the North Sea. And if you're trying to restrict your biggest enemy over here, fair to say the USA are doing a very good job of doing that. By the way, as we're on the map, and again, this caught a lot of people off guard. Remember here that Pakistan in general is quite friendly with the USA. They're on okay terms. No surprise then that before Israel and or the US, I don't know who started it and who initiated it, I don't know. But before they attacked Iran, funnily enough, Pakistan attacked Afghanistan last week. Now, not a lot's been made of it, but again, let's bring in the map here. Iran is here. You're going to have a barrage of abuse from the west-hand side. You might not get much from the north up here. You're not going to get much down from the south down here because of, again, all the shipping, US Navy and so forth. So, could we get a bit of help from China and the stans from the east? Well, yeah, if you can get through the Himalayas and go through Tajikistan, yeah, you could. I know that there's, belt and braces and road and braces, whatever the Chinese thing's called. Belt and Road Initiative, I think it is. So again, I know there's links through there, but Afghanistan's not exactly the friendliest terrain to operate in. But that was closed off in effect because Pakistan started bombing Afghanistan. And again, they are US friendly. So you're starting to put two and two together. And to me, it makes a lot of sense. I just wanted to add that as we were here, on the map. As well, that again, no surprise that Pakistan started, whacking out Afghanistan because put them two at war, and then that might close any roads that would exist from the extreme west of China all the way down to here. By the way, fun fact about China: it's a big old country, as you can see. It's only got one time zone. Now, if you don't believe me, you can Google that afterwards. There's a fun fact for you for the afternoon. So once we have a look at the map, that's what I can see. And again, I'm not, sitting here and agreeing or disagreeing with it. Again, I appreciate everyone's going to be different. People will argue it's unconstitutional, etc., etc. From an energy point of view, from taking up the bigger picture here, if the plan was to disrupt China and disrupt resource flow to China and to flex the US muscles, because again, we all know that China's got a pretty much control over a lot of the rare earth elements. Fine. It's got a hell of a lot of platinum from an article I was reading earlier on. So if you look at that, this to me is the USA showing them that, okay, if you've got rare earths, that's okay. But we're going to control that flow of oil, whether you like it or not. It's a flex. That's why I think if the aim was to affect China and take out the financial sector, by the way, in the UK and the EU, I think they're going to play this perfectly. I really, really do. So what's going to happen moving forwards? Well, bit of game theory here. The higher energy prices or higher energy prices for the Chinese, for that part of the world and for Europe, we could get stagflation. Absolutely. Because, if you look at the recent growth or lack of growth from the UK, for example, I know it's similar to an extent in the USA. Combine that with obviously rising prices, and again, energy plays a big part of that. It's stagflation heaven. What happens in stagflation? Well, the normal reaction, although it's challenging, the normal reaction would be to lower rates. Well, if you lower rates, what does that do? Well, that effectively means printing a bunch of currency. So if you then go printing a bunch of currency, what happens? Well, you then start devaluing your currency even more, and the cycle goes on and on and on and on and on. That's good for gold. That's likely very good for silver once Jane Street get out of it. Everything that we've said on this channel before, that's how I think that plays out. If that plays out like that, then commodities, the commodities are going to be the way forward. The only thing that could stop all of that is if there is an absolute catastrophic crash. I don't know if that's going to happen. There's a lot of red flags there. We've discussed this earlier on this video. We've seen senior credit lending. That's not looking good at all. Lowest levels in 5.5, 6 years. There's stresses in the market. There are a lot of stresses in the market. If you're then going to add increased energy to that, for, again, the EU and so forth, that is going to have significant consequences. I think, again, I'll go back to what Vince Lanci said. If you de-dollarize, we'll destabilize. Because if the US go and continue to do that, again, the US is very resource rich. It's not resource perfect, but it's very resource rich. Pumping out oil, or at least securing oil from other sources, as they have done to an extent in Venezuela. You have to say, I think they're playing it very, very well. Let's see what happens. It's foolish for me to sit here and make price predictions given everything that's going on. Again, I think that oil, silver, and gold are telling three different stories. Gold is telling us that end of the war is possible. Oil is telling us that, of course, there's a lot of disruption, and the news is changing daily. The only way I see us going back down to super cheap oil is if there's a massive crash. And I'm not going to bank on that. I would never rule it out, though. I'm in the camp of let's see what happens, because there's so many underlying factors at play, again, private credit and so forth, that indicate that it's not healthy. Again, you add increased energy prices to that, you get to stagflation. And I've just gone through what would be the likely response and how that's going to be beneficial for people that have physical gold and silver and miners and so forth. That's what I see. How long that's going to take to play out, I don't know. I don't have a crystal ball in front of me. But if we try and see the bigger picture and we're able to, take our emotions out of it, which I think is the most important thing here. And I'm just going to just reiterate this one more time. I know that many people are going to sit and look at everything that's gone on in the last week. I know that some people are going to agree with it. I know that some people are going to disagree with it. And that's fine. We can agree to disagree on things. That's okay. if we attack this from an energy point of view and an overarching policy of energy and disrupting your neighbours, I think the USA has played this perfectly. I think the UK and the EU have already been chucked under the bus, and I think that's going to get worse. Increased energy prices for a country like China, who import a lot of oil, take a lot of oil, disrupts shipping channels, as we've seen on the map as well. That's going to impact them much more than that's going to impact the USA. I can tell you that right now. So no wonder you see these reports that China's desperate to speak to Iran to get the shipping channels back up and running as soon as possible. It needs and wants that cheap oil. That's what it needs. If that don't come and everyone's now got to pay significantly higher, then okay. Of course, who else does that benefit? Saudi Arabia, oil producing countries. Oh, we were producing oil down at, $50 or $60 a barrel. Oh, it's 80 all of a sudden. Oh, that's fantastic. That's a 30% markup. That's, likely. I know that doesn't necessarily correlate straight away into 30% more profits, but let's keep it layman's. Well, that's 30% more. Happy days. Good for them. Okay. You also wonder what sort of deal President Trump and MBS has in Saudi Arabia. Okay, what are we going to do with this shock in oil prices? This is what's going on. This is why this is going on. Let's, maybe get to the midterms, or let's sort this out. There's going to be so much more at play that even you and I don't know. But it's important to bring it into the conversation, because once we're able to take our emotions out and look at it from, try and look at it from an unbiased, unemotional point of view, you look at it and go, well, actually, what's been going on makes a lot of sense. It does beg the question, though, is Cuba next? What about Taiwan? Does China fall into the trap? I don't think they're stupid enough to do that, but they could. Could they go out and show force of strength over Taiwan? Maybe. Would they take Taiwan? Well, you would have thought so, but I've read some stuff over the last few weeks that suggests that the Chinese Navy is not all that. That if the Taiwanese Navy went at China, it would take down the Chinese Navy. I've got no idea whether that's true or not, but we always have to consider both sides of the coin. So Taiwan's going to be a place to watch. Cuba's going to be a place to watch as well. And as you saw on that map there, if the US, again, is doing this from the point of view of, right, we control or we own the Americas per se, that's why Greenland, again, that shipping channel through Greenland, the North Sea, the other side. If you look at all of that, it starts to make a lot more sense. And you go, okay, I see why they're doing this now. You've got China, Russia, and India to an extent over in the east. They're doing what they're doing. We've got a bit of a battleground in the middle, in the Middle East. So therefore, in the West, what have we got? Well, we can discount Europe because they're financially knackered anyway, and they're just about to be even more so because they keep shooting themselves in the foot. And that leaves the Americas. I'm not, counting Africa at the moment, just because there's not a lot going on down there in terms of, their bigger part in the world to play. I know they've got a lot of resources, but for what we're talking about, you can almost discount Africa for now. Again, I just say that exception being Egypt, maybe Sudan and Djibouti, the countries that, again, that Bab and Ab, on the west-hand side of that. Yes, you're in Africa. Antarctica's Antarctica, Australasia or Oceania. Okay. Don't need to get involved. So therefore, you come down to the Americas, North America, South America. If the US is saying, we're the big dog here. This is what we're going to do. This is how we're going to do it. By the way, get on board. We want you on board. We want your resources. Let's work together. Let's do this. Let's do that. Well, you have to say it's working. You just have to look at the political landscape. And there's a lot of issues between the US and Mexico. That's a different story historically. But you look at countries in South America that are turning more right wing. We've seen it. I think the last one was it Chile or Peru? One of those two. I think it was Chile. And Malay's making great strides. I don't know if you saw what he said the other day in Argentinian Congress, but it was along the lines of he was giving a speech and said a few things. Everyone clapped. He said the only people that can't clap is the left because you've got your hands in other people's pockets, which I thought was hilarious. Maybe you find that hilarious as well. And I'm not saying Malay's perfect, but if you look at the cold hard numbers coming out of Argentina, he's on the right track. Let's get the mining up and running. Let's get this up and running. Let's make it tax friendly. I know that things have gone up price wise, but inflation's down. quite considerably. So again, yeah, all these things to bear in mind. But if you look coldly at the Americas, it's the USA saying, yeah, we're big dogs. This is what we're going to do. This is how we're going to do it. Off we go. And again, they've disrupted China considerably. They have disrupted the Middle East for sure. They are going to disrupt Europe, I think, significantly. The UK as well. So the one country we have not actually spoken about, and I will finish on this country before we sign off, is Russia. And how does Russia benefit from all of this? Well, Russia is very resource rich. So again, do you think they're going to be quite happy with a big increase in oil prices? I would imagine so. Absolutely. Does it mean that oil can flow more directly between Russia and China? Yeah, absolutely. Of course it can. So they stand to benefit because I would imagine that their resource revenue is going to increase. By the way, also, what Russia has been drawn back into, and I don't think that the EU, I mean, it would be funny if they'd done this, Russian gas. All of a sudden, we've got a disruption in supply because of everything that's gone on. Oh, but didn't the EU disrupt, or maybe it was the US, you can argue whoever done it, didn't they take the EU off of Russian gas? Well, that didn't do too well for the energy prices. Maybe we might want to turn that gas pipe back on. Can you imagine the EU groveling back to Russia? I think it's fair to say Putin would hold all the cards if that were to happen. Energy is the economy at the end of the day, and I will sign off and I'll say this, that with whatever's going on and whatever your views, fine, not a problem. We can always take things into our own hands. And what I mean by that is we can always institute our own plan B. We can always look at all of this and go, maybe I need this asset. Maybe I should have that asset. As cynical as it is, how do I profit from this? Maybe you should look at an anti-drone company. Maybe. A lot of defense companies. Yeah, maybe. They might do quite well in the next few years. So we always have to look at an investor side of this as well. But that's in your hands as much as it's in my hands. I'm lucky to have my trifecta of countries, but I've worked hard for it. I've studied it. I've researched it. And that's why I've got what I've got. Yeah, some of you might not want that, and that's absolutely great. Some of you might want that, but you're still, I haven't pressed that button or send me a DM. If I can help you in any way, I will. And I will say that, again, for those that missed the webinar of Adam Fired, you've got a second chance. So go and sign up for it Friday the 13th of March. It's completely free. It's 9:00 Eastern in the morning. If you're not able to attend, sign up anyway and you'll get a free recording. He's bringing in an exceptional individual who is going to deep dive even more into asset protection. You don't need millions to do it. You might only have thousands. But if you start getting a structure in place, that is likely going to help with everything that's coming down the line. The point being that you have it in your control, just like I've got it in my control. My job as a contrarian capitalist is to help you, is to serve you as subscribers. If you're not a subscriber, please do become a subscriber to the Contrarian Capitalist. You can become a free subscriber. That's absolutely great. Give the channel a go and then upgrade to paid. There's a lot behind the paywalls, a lot of insights behind the paywalls, market deep dives, company deep dives, what's going on, what's going on in my head as well. It's $11 a month. Or if you sign up for an annual, it works out about $9.20 US a month. You can also become a founding member. That's a one-off lifetime investment. One investment and you are a Contrarian Capitalist for life. I'm going to be doing this for a long time. My aim, my job, my role is to serve you. It's to serve you as best as possible. Share what I'm seeing and maybe the ways to, prepare and to, profit from it. Secure yourself first, but to profit from it, not just for you, but for your family as well. And that's my job. That's my role. And that's why I thoroughly enjoy doing what I do. So if you're not yet a Contrarian Capitalist subscriber, please do go ahead to contrariancapitalist.substack.com. Do subscribe. It'd be an honor to welcome you into the community. And I thank you in advance for being a free subscriber, a paid subscriber, or indeed a founding member. There's a lot going on. I know the news is going to change quite rapidly. But if we try and have a look at the bigger picture here, that should help us move forwards with regards to portfolio positioning and how we can look to, number one, preserve wealth in this situation, and then number two, gain from that and capitalize from that. I will sign off. Have a fantastic rest of the week. I'll be back with the commodity wrap on Friday and the market wrap on Sunday. Take care. Have a good week.